Today is Monday, January the 27th, and once again we've got volume, lots of volume, but what a day. Market was due for a pullback, and I guess there's nothing like a good virus, highly contagious virus to get the attention of the market, or give it an excuse to pull back. But look at all the blood in the streets. There was green in the healthcare area because J&J said they thought they could come up with a vaccine. And Merck is also a vaccine maker. Abbott is a vaccine maker. I think Pfizer even makes some vaccines. And Celgene, of course, they do a lot of work in gene technology. So they could be very well part of unraveling this gene and making a new drug. So anyhow, the volume, the advancers to decliners, 77 to, so that's almost 4-1. But the market was pretty flat. I mean, it took its hit at the beginning and then just rallied straight. NASDAQ took its hit clearly in the beginning and then didn't move very much. And the same thing for the S&P 500. So here's a Wall Street, here's a Wall Street Journal page. It shows us the 3,000 New York Stock Exchange issues traded. The decliners were 2,000. The advancers were just under 1,000. So the ratio there is 2-to-1, almost a little bit more than 2-to-1, but that is still going to take our market breadth indicator down quite possibly, certainly below this point, and possibly as low as the oversold line. More likely, it'll be in line with this arrow here, and there'll be a little bit more downside that we could achieve, or we could have another bounce up like we saw here. So this is the pattern: down, middle line, up, and then down, test of the middle line, down, test of the middle line, down further. That's the pattern that we're looking at here: down, up, down below the middle line. Now we should be looking at it to come up and test, if not tomorrow, then Wednesday, and the rest of the week, to come up and test the neutral line and possibly fail like it did twice here and give us two pullbacks before we come charging back into from an oversold market to too much money in the market. Let's take a look at the charts. The S&P was down a whopping 52, 1.6%. And we said on Friday that we had one of two ways. We are going to join the cloud up here if we continue to be bullish, or we were going to join the cloud if we were bearish somewhere lower. Well, look at this. Even if we trend sideways, we're going to hit the cloud sooner than we thought we would, and we're going to get that very important supportive test, test of support on the cloud. So watch that very carefully. The key thing here is what we saw in the other charts, meaning that the market didn't worsen as the day went on. The damage was already done in the overseas markets. The U.S. markets followed suit, but didn't get any worse. Let's look at the overseas markets tonight and tomorrow as we look at Asia and Europe and see how they behave, and let's keep an eye on the futures overnight. Almost down $10, I mean 2.93% for Apple. This is quite significant, but look at the volume. Certainly no panic here. Now, Apple reports tomorrow. So all of this is for nothing. If Apple comes out with stellar earnings, it's going to come back up and it's going to test this 200% line again. I really don't think that Apple's going to report anything other than stellar earnings. But what we also did see is we saw, if we take, well, we can't, but see this little gap right here that we didn't draw? Today we closed that gap. Now the next gap is down here at the 275, 276 area, but we closed that little gap, which we hadn't previously drawn on the chart. Amazon down substantially. Let's take a look at the volume. Pathetic volume. Again, Amazon has earnings this week. This was a pullback in line with concerns that the market had about overall, but I think Amazon is still safe, and I'm still holding on to my March spread. Is it a March spread? Sorry, it's a February 1900, 1910 call spread, which is currently losing $500. It's about the point where I want to get out, but I'm going to wait and see if Apple does well for me. Now, this pullback with Apple allowed me to sell my 310 long calls for a $1,200 profit, and I bought the stock at a little bit over 310. So that was fantastic. So now I have a series of shares, 200 shares, which I purchased at just a little over 310, and I have the March 310 calls short that I originally traded for $9.80. So if we shoot up tomorrow, I'm going to get my stock taken away from me before the dividend next week, and I'll have made the profit that I thought I was going to make in March, but I'm going to make it before February, in the first week of February. Caterpillar down with all the industrials. Look at the volume again, just average 20-day volume. We came down and we fell below the 200. Now that's significant. We fell below the 200, came up and tried to close a little bit, close at the 200, but we got resistance and we came back down. So the Ichimoku span did not hit the 200. That's the next thing we watch for. That's the next point where we're going to get an idea of where this stock is going. But now you're seeing that the 135 short calls that I've been rolling for Caterpillar for so long, because I didn't want to buy Caterpillar at this area up here. I was happy to roll my 135 short calls, avoid getting my stock taken away from me at ex-dividend, because I rolled out to March 135s and nobody was going to let me away with that premium just to take my stock. So, I mean, this is great to me today. I hardly lost anything with Caterpillar because my options pretty much made up for my losses in the stock. So that's fantastic. So we're going to try to put in an alert here. And say create an alert where the Ichimoku span touches the 200 EMA. Where's the 200 EMA? There it is. Okay? And we're going to trigger that multiple times so that we don't miss it. Where we go next? We go next to Home Depot, down $1.34. Rallied right back up again. Really strong stock. Flat clouds attract. It's starting to attract. Its earnings are this week, and it's still got the long-term momentum up, short-term momentum down, but that could reverse like we saw here. But the long-term momentum, if earnings weren't coming up this week, we trust the long-term momentum. Shopify down 16. Where's the volume? It's still showing overbought, and the volume was just a little bit under relative average volume. Its earnings are coming up on February the 12th, so plenty of time here. Look at their last times that they've had earnings. Here they beat by 14 cents, but dropped and then resumed. Here they beat by 11 cents, dropped, and then resumed. Here they missed by 40 cents, dropped, hit the 200, and resumed. This little Canadian company is resilient, and it just might be something to buy. Look at the volume right up there with average. It's had institutional buying and selling now for 1, 2, 3, 4, 5, 6, and almost today. But look at back here. So it's had institutional buying for quite some time now, and Andy pointed that out to us in a comment on one of the videos. Tesla down, pathetic volume, so don't read anything into that. The SMIs are both going in a downwards direction. Earnings are Wednesday night, so we're going to revisit our odds for a bull call spread possibly Wednesday, looking to, it'd be a 50-50. It'll be a toss-up. For me, it all depends on what happens to Apple. If I make a ton of money with Apple after the market tomorrow, then I'll be a little bit more prone to take some risk. WDC, the chip company that we haven't looked at in a while, big loss there. It's also showing as overbought, but not very much volume. Did I say Whirlpool already? No, I didn't say Whirlpool. Whirlpool long-term is dropping, short-term SMI is increasing, negative, no volume. So nobody was really selling Whirlpool today, even though the price dropped, the volume was pathetic. So those are the stocks that we want to look at. That's what we want to see in the S&P. We didn't look at the VIX, but look at the VIX. Look at the pop-up in the VIX, both of them coming off an oversold area, or an area that's just too low, and had been trending in that too low area since October, with a little scare in December, but clearly an important scare here. If we see this VIX drop tomorrow, then we're going to see the market retake a little bit of this gap, and we'll draw this gap in tomorrow, and we'll look at how the market treats that gap.